The usually sleepy month of August, well, it is shaping up to be anything but that. Declines have been dizzying on the first day of trading since S&P downgraded the United States. For more on that, let's check in now with Sean Egan. He's the president of Egan-Jones Ratings. Sean, good to have you back. And we should remind everybody that you put the U.S. on watch back in March 1st, and you actually downgraded it back on July 16th. I mean, you've seen this coming, haven't you?
Absolutely, yes.
Let me ask you a couple of things. First of all, in terms of the market reaction, are you surprised by how steep we're seeing these declines really in almost every asset class?
Yes, but I think you have the backdrop of the European problems that haven't been solved. In fact, they've grown since the last time we talked.
So that a bigger problem than you think the U.S. downgrade here?
Yes.
Yeah.
I mean, the U.S., we're talking about a relatively small downgrade from AAA down to A+. The U.S. is still an incredibly strong credit.
They're not going to default.
Exactly. You don't have to worry about it. Yes, borrowing costs might creep up over time, but it's hard to imagine that the U.S. is going to have any difficulty in any time in the near future. Probably in our lifetime.
Hey, Sean, you know, I actually just flew in from Germany this morning. I spent the whole weekend talking with bankers, hedge fund managers, commodities traders. All of them had a tone of disgust when they talked about the U.S. political situation, but no one actually believed that the U.S. would default or was even close to a default. So is this purely a political move by S&P? And then that begs the question, was it a political move by Egan-Jones as well?
You know, you could say it's a political move from two dimensions. One is that S&P listed their #1 reason for downgrading being the politics. That is, they didn't like the back and forth about how exactly to solve the problem. They would have preferred that that there wasn't that much discussion. From our perspective, we like it.
Isn't that democracy?
It's democracy at work. Hopefully,
right.
The outcome is the best solution. So we think if there isn't the discussion, if there isn't the debate, we worry about it.
You know, the president came out today, Sean, and he said our problems are imminently solvable. Imminent meaning likely to happen without delay. Do you believe that?
I think it's going to take some time. No, I don't think it's imminent. I think of within the next month and a half. Not likely. However, the spotlight is on this issue, and it's likely that we'll address it within the next, let's say, 6 months.
In your view, and S&P definitely in their downgrade, reading their report, they mentioned revenues. I mean, they obviously see we need more of a balanced approach. You agree in terms of getting us out of this fiscal deficit?
I'm not going to take part of that. I think that there's a ideological clash right now between the neo-Keynesians who believe you need the economic stimulus and forget about the growth in debt that results from the economic stimulus, versus the neo-libertarians who are saying shrink the government, shrink it to the point where somebody said you can drown it in a bathtub, and then you'll be set. I think they're both right and both wrong. That the government has to play an active role in getting us out of this. But at the same time, you want to be careful about what expenditures you make so that you're spending it on the right time. I think the right template is what puts the country in a better shape over the next 5 or 10 years, basically for the next generation. That's probably the best way of thinking about it, because basically right now we're at an impasse, and I think there's a lot of frustration on both sides because of the ideological clash.
Are you though as optimistic as the president? I mean, do you believe that our problems are imminently solvable? Because when you look at some of the projections, I mean, Bloomberg Businessweek's cover story last week, it doesn't seem like there's any way out of this for us.
There is definitely a way out of it. The U.S. is an incredible country. You know, the entrepreneurial drive is amazing. You see typical entrepreneurs working 80+ hours per week. So what if the baby boomers have to work another 5 or 7 years? They're in better health than their parents and grandparents were. That's not the end of the world. The U.S. will solve its problems. Europe is a completely different matter. And with the underlying problem in Europe is that you have haircuts that are flowing through the whole system. That's why you have the European banks down. You talk about buying in the U.S., a lot of it is probably capital being pulled back to Europe to absorb some of the losses that are coming down.
Not to mention you got a bunch of countries and a bunch of personalities and a lot of leaders, and it's not an easy
fix.
fix.
Right, and you don't have a Hank Paulson. Hank is incredible. He could, you know, whether you like him or not, he had gravitas. He could get it done very quickly.
We are here again with Sean Egan. He's the president of Egan-Jones Ratings. We're also going to open up the discussion a little bit to include Berkshire Hathaway, and that's why Andrew Frye of Bloomberg News is also joining us. He, by the way, covers the U.S. insurance industry. So, Sean, glad that you're sticking around. Andy, let's kick it off with you. Glad you're joining this conversation. information. Berkshire Hathaway. So how does this fit in that why they may get a potential downgrade?
Well, the S&P had downgraded all the insurance companies that had a rating that was higher than the U.S. government. And they say that they can do that because of all the extensive kind of government holdings that insurance companies have, and the less amount of security that they have.
I mean, it kind of makes sense, right? Because, I mean, Berkshire does have a lot of exposure to the insurance industry, right? A lot of their profits come from the insurance industry.
That's right. About 40% comes from the insurance industry.
I mean, Sean, do you think this was fair in terms of what we're getting on the insurance guys, including Berkshire?
You know, what you're touching on is called the ceiling, the sovereign ceiling. The thought is that if a company is domiciled in a particular country and has difficulty changing its domicile, then the uppermost limit is the country's rating itself. It's not always true that a company can't move. There's been, what was it, Halliburton moved, or Schlumberger moved too. So there's also a lot of insurance companies located in Bermuda right now too. So it doesn't fit the old style of a country having the corporations captive within it has changed. So I'm not quite sure. In fact, we haven't issued a negative watch because we're debating this internally, whether or not it makes sense to cut the rating because the U.S. government is down.
Yeah, you know, I was wondering when I saw this Berkshire getting a negative watch from S&P, I thought of you first, Sean, because you downgraded the U.S. before S&P. What's your take on Warren Buffett here? I mean, is it just guilt by association, or is he still the man with the plan?
Warren is absolutely fantastic. I hope he stays healthy for another 50 years. You know, there's nobody else like him, and I hope that that the Berkshire continues to do very well. We think that's one of the best managed companies on the face of the earth, and so I don't think that we have a AA+ rating. We probably won't take a negative action, put on a negative outlook, a negative watch, but we're discussing it internally. I think that the company can break off parts if it really needs to. If its funding cost rises to any great degree, there isn't a huge amount of difficulty in shaving off some of it and putting it in Bermuda and or London, if that makes sense. We don't worry too much about Berkshire Hathaway.
Andy, what are you hearing from the folks that you're talking to about Berkshire Hathaway? I mean, what Warren Buffett can do to get this rating changed?
Well, you first have to consider whether he cares.
He probably doesn't, does he? Considering what we've heard over the
only if
weekend.
it increases his funding cost.
Okay.
And in terms that has yet to be seen. The credit default swaps, they did rise today on Berkshire Hathaway debt, which is one indication that the debt markets are starting to view things a little bit differently. But Buffett has said he likes exposure to the United States government. In fact, he keeps most of his cash in short-term government securities. So even if S&P says it's less, Buffett seems to be inclined to take a different road from that and, you know, deal with the consequences.
He often takes a different road on a lot of things. Hey, Matt, I know you want to jump back in here.
You know, in the HBO movie Too Big to Fail, Warren Buffett was absolutely deified, but Hank Paulson was definitely glorified in that movie as well. And Sean, you know, you just mentioned to Carol in the last block that you think he would be one of the guys who could really do something, get something on in Washington. Are you suggesting that the Obama administration call him back into action?
I think it makes a huge amount of sense. You need somebody who can understand the problem very quickly, and I'm not sure anybody on the European scene does that, and has the gravitas to get things done. In Europe, it's much more difficult than it is in the U.S. because you have to coordinate things with about 17 different countries. But Hank Paulson has the ability to make the right calls, understands the problems, and I'm not sure that Europe has a good handle on what they're being faced with, especially with the haircuts of close to 45% or 50% in the case of one small country, and that is Greece.
But do you think that the president's thinking about Hank Paulson? Do you think that Hank is thinking about going back? Is that a possibility?
Well, I hope so, or somebody else like him. That you really need somebody to pull it together.
Or let's at least hope that maybe his phone's ringing off the hook and maybe giving some advice on some things. All right, I do believe we're going to wrap it up there, and we do have to run. Sean, thank you so much. We appreciate it. And Bloomberg News' Andy Frye, thank you so much as well.